Hey everyone, this is Rajendran from Market Calls and welcome everyone to Nifty Daily Profile Analysis. And today's date is 20 June 2017 and time is 5:30 a.m. in the morning. And I'm going to do the top-down analysis. Let's start the day with the monthly charts. The monthly charts are one-time framing higher. It's continuously making higher highs for the consecutively for the last 6 trading months, right? It's continuously keep on making higher highs. And on the weekly charts, the markets are moving unidirectional with less rotations. Probably very less rotations are coming in over here and over here, right? And the last 3 months, the last 3 weeks are moving in a highly compressed tight range, probably in probably last 3 months, the last 3 weeks are moving in a tight 100-point range, and that's going to be a frustrational movement for every short-term trend follower, right? Or a very short-term trend follower. Markets are making hardly 100-point range for the last 19 days. That's going to be an trend followers killing machine, right? And let's get into the daily charts. The daily charts are still in uptrend, and currently it is in the balancing mode. If you look at the balancing mode, the markets are balancing and then it's breaking out, it balances and it breaks out, it balances, it breaks out, it balances for a while, again breaks out. This is keep on repeating throughout the since the start of the 2017. I don't know how long this is going to repeat, but what I am seeing right from the market is it is in a short-term balance. No fresh money buying is seen, no fresh money selling is seen, but just only rotations are happening in this recent days. Since the start of the June season, only the rotation is happening in, and that too the rotations are very much contained between an 100-point range, between 9,600 and 9,700 is where the price rotated most of the June series, starting from the 1st June onwards. Alright, and let's quickly look into the profile and then let's try to understand what are the key reference level, what are the possible auction Nifty is in the making, and let's go through the scenarios as well. When talking about the reference level, we in our previous video we are talking about this particular references, right? This references we are talking about it. It's 4 times selling came very mechanically over here. It's more of an mechanical short-term sellers, right? So they are or we can say like mechanical short-term weak sellers, and again the mechanical selling continued over here as well. Mechanical selling continued over here as well, right? And the all-time high is again an weak high. The all-time high here around 9705. It's a weak high. You can see that it's a weak high. It is a weak high because just couple of ticks above that. It's not a good. It's not a good high either. It's a weak high, right? And the short-term sellers are taking control in this markets, and but still the range remains within the 100 points range throughout the last week as well, and the current week as well. So far we are still contained within that 9,600 to 9,700 bands. And on Monday's trading session, price opened at the edge of the day, right? And then it shoots up. The bottom was made in the first half an hour, and then price was moving till the mid of the day. It was moving within the initial balance range, so nothing much was happening in. But then the late breakouts, price was moving higher, right? The price was moving higher, but then the point of control is not shifted higher. That says that the inventory is getting too long again. Probably when the inventory is getting too long, probably the long inventories of the short-term players are getting too heavy. So naturally it's not a good sign for the uptrend continuation. Yes, and again you can see that the day's high at 9695 or the 9696 levels are again nothing but the same reference level where the price rejected, right? So is it a strong rejection? No, it is not a strong rejection, but it's a weak rejection. Weak players are again coming and selling in this markets, right? And then it made a pullback low as well. It made a pullback low as well. So let me mark this range as a pullback low, it's a pullback low. So we had a pullback low in the last 1 hour of the session. Nifty made a pullback low, so that remains the critical reference level for the next trading session. And it was a kind of a double distribution day as well. Let me split up the profile. It was a kind of a double distribution day. So the top of the balance acts like a support for the next trading session, right? And then the bottom of the balance is over here, and the mechanical selling zone, I would call this as a mechanical selling zone. This complete zone, I would like to call this as a mechanical selling zone, because still mechanically shorts are keep coming in. Mechanical shorts are keep coming in. Right, so mechanical selling zone. So 5 times selling came exactly at those reference levels, and even in today's session, the selling came exactly over there. Right, so market is probably, we can say that market might be creating an illusion that there is some sort of resistance is over there, right? Probably it is trying to create an illusion or trying to game someone, or probably it want, when it is breaking, it want to make people believe that there was no more resistance for the market is going to inch up higher. But what I'm seeing is that even though if this resistance is going to break out, I'm seeing an unless there is no sustained breakout coming in, nothing. We could see some selling back coming into the markets, right? So let's prepare for the scenario. I would like to talk when coming and talking about the scenarios, and on the downside, I will also see this mechanical reference. So mechanical reference on the top, mechanical reference on the bottom. That says that still only the short-term players are playing this game, right? Only the short-term players are playing this game, and nothing much is happening around. So okay, let's talk about the scenarios. When talking about the scenarios, probably I would like to see this when this stops, right? So the mechanical selling zone, I would call this as a stop zone. A cluster of stops are coming in, and when the price is going to take out, it could be possibly taking the very opening itself, right? So this is the very first scenario I would like to go about it. It breaks up, and then since the inventory is already long, a too long inventory could bring back some inventory correction in the markets. That brings an value area overlapping in this range. That could bring some activity in this range, right? So that would bring some activity in this range. So the price could try to rotate in this range, and then at the end of the day, they would still, if they are able to sustain below this 9,700, we could say that still there is no serious buying coming into the markets. Still, end of the day, if 9,700 is going to hold, then probably or we are going to close very close to 9,005, 9,706, 9,710. We could say that still this market is not going to be a serious buying market. Yes, the sentiment is positive, value started moving higher, but then the inventory is getting high, represents that there is a serious risk involved in this, even if it is going to break out. And so what I'll be looking out is the second scenario. What I would be looking out is an price breaking above the reference at the open. Let me put this scenario to in a red color. I'll put it in a crimson color. Price breaks up, and then it comes back into the range. It comes back into the range. It comes back into the range, and then what we can say is that it's not an high confidence selling. It's not a high confidence selling markets, and probably this could bring further selling towards the 9,600 reference in the very short term, right? So this is the second scenario I would like to go about it. Market still maintains the sideways reference, whereas the first scenario what we talked about is price breaks at the very first 45 minutes, but then it still balances. It probably at the finally it tries to tries to close somewhere around 9,700 or in this range. It could try to trade. It will be a dull, boring, compressed moment, whereas this sort of movement, I look above the balance in the sense that the balance which I am talking from the daily charts, the top of the balance is here at 9,700 reference, right? So when price is going to break above the 9,700 and it's going to pull back down, that's not a good sign of an high confidence buying. That's an kind of a weak buying which happened initially, right? So probably the destination is towards the other side of the balance, probably 9,590. One has to look out for, right? And the third case is going to be a dull, boring session. Probably we may see some activity in this reference. We may see some activity around this overlapping. Price opens within the value area and it started moving in this range. So nothing much happens. It does some overlapping, or probably in the mid zone it might try to breach and then comes back in, and finally it will totally try to contain below 9,700. So nothing much in such a scenario, nothing much happens, and in all the scenarios 9,700 is the key reference. In all the scenarios I'm anticipating price to close down below 9,700 or very close to the 9,705 or 9,710 reference level, right? And there is no bullish scenario as of now because markets are highly compressed. It's in a highly compressed mode. If it is an high confidence buying, probably once the balance gets broken out, probably I'll draw it over here. In a high confidence market environment, price breaks above this reference, and it stays above, and then it doesn't get back into the range. It doesn't get back into the, probably it does a little bit thing and it start going up, right? So this is a sign of a high confidence market. In low confidence markets, those balance will get whipsawed, or probably we can say it still does more rotations, tiny whipsaws coming around that reference, and nothing much happens, or a sharp spike and then a pullback, right? So those kinds of things means that it's not a serious buying activity in this market. It's more of an short-term players are coming and getting trapped. The short-term buyers are going to coming and get trapped, and anything which is going to happens down below represents the same, right? Okay, fine. Thank you, everyone. We'll meet you again in the next session. Until then, bye bye.